Today, we are going to get into some of the bigger timeframes. We are going to talk about what could be happening going forward and maybe even give you guys one point very early on here that I think you really need to pay attention to because of that Jackson Hole speech and what was said in that overall speech. I think it would be very good to pay attention to one piece of data that's coming right around the corner since they are still going to react to the data, even though we did get the 25 basis point cut announcement and possibly another 25 basis points by the end of the year. They still said they are going to react to the data. As of right now, exactly what I was thinking was going to happen was a 25 basis point cut in September. It looks like that is the most likely scenario. Just know if they start to talk about in September a 50 basis point cut or a 75 basis point cut, that could be bad. But we all know I was overall leaning towards that 25 basis point cut, and that looks like what we're going to get at this moment until they receive some data. So what piece of data could they be needing to react to? And I think that's what we need to get into as we get into some technical analysis for the SPY Qs, Apple, Tesla, Amazon, NVIDIA, AMD, and Meta. Looking also over at AMC and GME because AMC did something that it hasn't done in a very long time. So stick around. Thank you so much for being here. Make sure to like the video. Make sure you're subscribed because we're going to get into it. Let's start off with the SPY on the daily scale here. What do we notice? And this is just something very key that I kind of want to talk about after I go over the monthly scale. Actually, we're going to do this in a little different order, actually. I'm going to go to the monthly scale and just show you guys why we need to be aware of any big downturns in the market. We've seen this, we've seen the experience of, well, we've gone up and up and up. We saw a little bit of a, I would say, monthly correction down to that monthly 50, and now we've had up ever since. So make sure we're paying attention to monthly curl ups. But as we look into this, we can notice that if we were to turn down from here, hey, we could experience some kind of divergence, some kind of weakness in momentum here, weakness in momentum on the MACD and the RSI at the same time. So we have to keep that in mind. Will that lead us to break down over time into some kind of bear market? We have to pay attention to that. And that's where I really wanted to talk about a piece of data. Okay, I wanted to talk about a little piece of data that I think could be pretty important. And I think that it's good to put into your calendars. Okay, so Jerome Powell, if you didn't notice in his Jackson Hole speech, he did say something very key. He said this: "We do not seek or welcome further cooling in labor market conditions." And I think that is the main thing. Like, if you want to take every single speech and dig into it and see what he means in every sentence, it's like, well, this is the sentence I think you really need to pay attention to. I'm going to say it again. We do not seek or welcome further cooling in labor market conditions. They are obviously noticing that the unemployment rate is going up. The SOM rule has been triggered. They are noticing that, unemployment doesn't include illegal immigrants. And they're also trying to state that layoffs aren't the reason for this. And I think that that's just blatantly untrue. I think I see every single day a new article of some other people getting laid off. And one of them was even GM. I think GM even recently just said, a lot of their employees coming out and say, we got laid off and it was like we were their employees and we were just thrown in the trash. That's literally some article that I read recently. And we're seeing a lot of that sentiment across the way. I'm experiencing that in my real life with family members in different areas of the country saying, hey, we're truck drivers and we're getting laid off. And if truck drivers are getting laid off, that's not a good sign. So I don't think that's 100% true. It's not really a lie. They're not talking about the revision in the jobs data either. So that is something worrisome. They're like, the jobs market is really strong. Well, the jobs market was really strong until we saw the worst revision since 2009. And so, and a lot of the articles are saying this time is different. Just be very careful when they start saying this time is different. Every single time in history that they've used the phrase this time is different, it ended up being completely the same. So that's why I think we need to pay attention to it. I think we're going to experience maybe some kind of euphoric moment in the market where the market gets really excited. And that might even be over the next couple of weeks. And we need to pay attention to a key piece of data. That key piece of data is this. Well, he does not seek weakness in the jobs data, right? He doesn't want the job market to weaken anymore. And we can look at not September 5th, but let's scroll down to September 6th. September 6th is what I would mark off on your charts. I genuinely think that this is going to be a very important day. We get non-farm payrolls and the unemployment rate, and those are supposed to come in, well, pretty even for the unemployment rate and down for non-farm payrolls. If this number came in, that would be a weakening in the conditions, and you need to pay attention to that because that could mean they're going to raise that, right? right? If it weakens too much, that can make them want to cut by more than 25 basis points. And if the unemployment rises as well, that can cause them to want to maybe cut rates by more than 25 basis points. And that would be a reaction because things are cooling off too quickly. Things are dropping, layoffs are increasing, unemployment is increasing too fast. We may be experiencing something bad already and seeing that recession right around the corner. So as we look into this, one thing to note about non-farm payrolls and unemployment. Non-farm payrolls, they can fudge this data. Just so you're aware, they can revise this later on, but unemployment rate is a lot more difficult to make up. It's a lot more difficult to mess with. We do experience times of consolidation in unemployment, but if we want to look at this, we just see how it really exponentially grows over time. We see the SOM rule getting triggered. I just want to show you look how that's starting to exponentially grow. And if we just look into the past, the last time we saw signals like this, what ended up happening was the SOM rule gets triggered. All right, SOM rule gets triggered. And then we see consolidation for a moment, and then it starts to exponentially grow again. So we could be experiencing that time soon. And I would just want you guys to be aware of that. Now, let's switch over into the Qs, and we're going to keep talking about these things. But the SPY we're going to talk about, it's very similar to the Qs. So we're just going to talk about it all in the Qs so we keep moving along. First of all, we see that monthly divergence. Boom, we see the monthly divergence. We see the monthly divergence on the RSI and MACD at the same time. So that means we need to pay close attention to the next couple of weeks as we get closer to that jobs data, right? Mark that on your calendars. As we look at the weekly scale here, what do we notice? We just notice there is divergence all across this top, very, very flat. We notice that it's on the MACD at the same time. So this downturn could have been really, really bad. Now we have based out. We found those squeeze signals. So thank you so much. Give yourself a thumbs up and a pat on the back if you were part of that squeeze, because we were really calling that out and using NVIDIA to do so. Maybe we'll show that off a little bit on Sunday, and if you want to learn that style of trading, well, there's courses down in the description. They're 90% off in August. August 31st, right after that, they're going up in price, so get it while it lasts. Right now, if you want to take that technical indicators course, it will really make you a great trader. I genuinely believe that. I've heard it from multiple people. Tons and tons of people have emailed me and said, thank you so much for putting out that course and thank you for putting it on sale. It's fantastic to see that sentiment, and people are making their money back within like one trade. They're making 3 times what they paid, and that's exactly what I want to happen. Is really learn this stuff and kind of come back and we can talk about stocks together, and I'll take a look at it with you to make sure early on you're seeing things correctly. But the weekly scale here, so if this were to turn up for a couple of weeks, notice what would happen. Well, we would leak up into most likely what? Well, we'd go this week and then this week into September 6th. And that could just give us some kind of double top. So it is a time to pay attention. I'm not calling a double top by any means. We're going to talk about the shorter time frames on this, but I just want you to be aware that if you see a small curl up here and then that just gives it up, that is what I would really be paying attention to for some kind of double top, some kind of reversal. If that just continues to the upside, we should expect positivity. But I'd really want to get through that September 6th before I want to get any kind of really, really bullish sentiment in myself for the future here. As we go into a daily scale, we can talk about this a little bit more on Sunday, right, in those videos, but this is where we really need to pay attention as well. That would be if this daily just crosses over. You notice that these dailies, and the SPY looks very, very similar. It's really close to the center line. So even though I think in the shorter time frames we're experiencing some kind of pullback, even still, or pullback with time moving sideways, we need to be aware if this daily starts to cross, because when that daily does cross and you go into negative territory, bad things can start to happen, okay? Bad things can start to happen. If you notice right along this big gap down, that was right when we went into negative territory. So you get a big gap down during negative territory, consolidate, and then 2 more gaps. More bad price action happens in negative territory, and you're very close to that, so you have to be aware of that crossing. Am I leaning towards that? Not necessarily. I think we're going to see it almost cross and then turn right back up, and then we could see a signal similar to this one and really give you that divergence here on the daily scale between those highs. I think that is the most probable thing to happen as of right now, and notice how that would bring you right into September 6th, which just, I've had this standpoint for a few days now. I just started to look into September 6th, and it just happens to line up with that look. Obviously, no one can ever guess exactly what happens in the market. I just follow the signals. I encourage you to do the same. We say that all the time in the course. We tell you, follow your signals, manage your trade, trade like water, flip the script all the time. If you're seeing a signal that goes against your trade, probably want to flip the script, right? So That's just something to pay attention to, see if that daily scale soon has that weakness, but I'm really leaning towards a push higher, hit a new all-time high, cause that euphoric maybe trap, and then we'll see what happens from there. As we go over into things like Apple, you're going to notice a similar thing. A lot of daily charts really close, very in range of going negative, but for the most part moving sideways. So I still think positivity is the most likely option here. Just real quick, if we want to pop over to the dollar, we just noticed that thing dropped off dramatically, and we noticed that everyone is trying to short this level, so that can encourage more of a short squeeze going into next week. We'll see what happens with that. I still am leaning towards some kind of bigger pullback, at least to get into some kind of trades. I've made great money with the short squeeze. Hopefully you did too if you were a part of this channel. Thank you so much for subscribing. But I don't want my next trade to take all of that away. So I want to make sure to practice some patience, something we talk about in the course as well, just being very patient. That's what I'm doing at this moment until I see a good trade setup. And that's the key thing. If I see a MACD curl up, that's fantastic. But if I just take every single MACD curl up and take that as a trade signal that I have to take a trade, well, how close is that to overbought? Is there really a lot of room to the upside? What's the risk to reward? Those are the things I'm looking for. And right now, I don't think the reward is good enough for me to take the risk. I think there's more risk to seeing a further pullback at this moment. Dollar dropping off though, so we have to take into consideration we could still be squeezing in this moment. We'll go over volatility towards the end of this video. Now, as we look forward into things like Tesla, Tesla's a little bit different. So Tesla is a little bit different. And just so you're aware on Apple, just so we can make sure to show you guys some stuff on Apple here, I just want to show you it's making a multiple divergence point here on the MACD. It doesn't mean like, hey, this can't be a positive thing. You notice we cross up right here on the monthly scale. What happens? We end up higher. That's still fantastic. But for the most part, we would say, okay, that's making a multiple divergence points up here. And that's not really exceeding any levels. We could continue higher, but this could also be just some kind of hammer candle. We go a little higher and then that drops off. So I'd really be paying attention to if these monthlies roll over in your individual stocks as well. But that's where things get a little bit different with Tesla. Tesla actually showing, I don't know if this would be because it maybe has a short seller problem or something like that. But for the most part, I would say it's probably going to react like the overall market. But if that monthly does curl up and you see a strong bar, that actually would say that this is a pretty good investment for the next 12 to 18 months. We can really look for, and pay attention to fake outs because those can be a little bit hurtful, right? So we'll pay attention to that. But the last time we were able to really curl up from that center line into positive territory, what happened? Well, over the next, I would say 12 to 18 months or 12 to 24 months, we'll just take a random point down here and just go, okay, so in about 2 to 3 years, you're up 2,600%. If you wanted to only hold that for say 18 months, you were up about 1,800%. So this is why you have to pay attention to these things curling up. Tesla's a little bit different, but when every other stock is really showing like I'm way overbought on the monthly scale, I have divergence on the monthly scale, a little bit worrisome to try to go long on a stock like Tesla that might not even have a short seller problem. But as we look into the weekly scale, we need to pay attention if things are rolling over. As of right now, that's not happening. Okay, we're rejecting a little bit here. If we experience that weakness, we go into negative territory, we could go a little bit deeper, right? We could go deeper. So you have to pay attention to these things rolling over. I'm not necessarily leaning towards that. I think on the daily scale, we still have an opportunity to get up towards a 234, even an opportunity to possibly break through and get that new high here in the recent time. I think that is possible for Tesla going forward. Amazon, you have to really pay attention to this one. Why? Because the MACD positioning, right? We talk about this in the swing trading course. What did we do? We came back up into the breakdown area that we gapped below. We're using our 174.51 as some support as of right now. We gapped above that. So we V-shaped here. And then now we need to pay attention if this daily crosses over. Because why? This is already in negative territory. This isn't in positive territory and it could see a little blip and then turn back up. This is, if it turns down, the most likely scenario here is you are going to test this low, maybe even go make a new one. And I think that's key to understand really how bad these daily MACDs can be if you start to curl down. And Amazon gave you the reversal signal on the monthly chart here, showing it one more time. We just noticed that, hey, this is a great recovery here, curls up on the MACD, 12 to 24 months. It's a great trade. And then you notice this above you. Is that a very good sign? If I was seeing this on a 30-minute chart, would I say, oh, this looks great to go long? No, it doesn't. This looks very bad to go long right now. I'm just being honest with you. You're seeing divergence, triple divergence on the RSI, single divergence here on the MACD. That is not a good sign. If you start to roll over, you can really start to experience weakness. Maybe we go down to a monthly 200. We see a divergence or something like that on the monthly. If that happens, Oh boy, that'll be a great signal for some upside. But am I leaning towards that? I think we're going to suffer over time across the whole stock market soon. Doesn't mean it can't last for another 6 to 18 months though, right, of upside. So NVIDIA, this is one that's just going up and up and up into crazy, crazy town. And you'll just notice here for NVIDIA, what do you overall see? Well, this is very, very high. Is this a good opportunity? No, the good opportunity was way back here in March of 2023. We see that rise over the next 24 months. That's when we really want to be going long, at least in my standpoint, as far as swing trading on the monthly scale goes. We talk about it in the courses a lot, but in this area, I'd be chasing if I was trying to invest here and say that's going to go up over the next 12 to 24 months. No, most likely in this area, we're experiencing rate cuts. It's not different this time, guys, and it's most likely going to lead to some kind of recession that is going to cause these value of these assets to pull down. And that's just the blatant truth. Where could that pull down to? Well, minor things, hey, maybe 95. But if it starts to escalate a little bit, I'm really leaning towards this 40 price point. I think NVIDIA will go down to $40 if we experience an overall pretty bad recession. And I think that's possible because we do see divergences here on the RSI, even though it's not on the MACD, it's showing up on the RSI. And if that experiences some monthly weakness, crosses over on this MACD, we can really start to downturn from here. So I would be paying attention to that as we look into a weekly scale. We just noticed that it had divergence right here, divergence between these levels on the RSI, not necessarily on the MACD at the same time, but that led to a pretty big pullback down to 95 again. Okay, so what I'm saying is if we're going to experience something like kind of bad, we could go down into this area, kind of consolidate, maybe start to head up. But if we experience something really bad, I'm more leaning towards this price point going all the way down to possibly $40. That's the truth there. Now, if we wanted to, we still can head higher if we cross through, right? We still can head higher. We're coming above the trend between the most recent two highs. If that crosses up, you need to pay attention because this week that crosses up. Next week, maybe it crosses up, and then Friday we'll get that jobs data, and that could be bad. Now, I know NVIDIA has earnings. Obviously, earnings is a 50-50 flip, but these are the things that I'm paying attention to for NVIDIA. AMD, you're looking like what? Hey, if I curl up on the month or on the weekly scale, I can see some positivity here. That's what this is overall saying. But as we zoom out, this does not look like NVIDIA. We see the monthly scale. We see that upward price action. We see the divergence down just a tiny bit here for the monthly scale, but it's not a tiny bit on the RSI. It is not a tiny bit. You have pretty much triple divergence on the RSI. So this is where you really have to pay attention if this crosses, and it's very close. So you do have potential to see that breakout. Oh, this is going to new all-time highs, and then we just start to turn down over time. And that's what I want to pay attention to over the next couple of weeks going into that jobs data. As we go over to Meta, this is one that's screamed higher for a long time. And the main thing with this isn't necessarily the monthly scale. We've seen just a huge V-shape. That's why we want to pay attention to when monthlies are turning up. But as we go into a daily chart, actually, the reason we could experience weakness pretty soon is because of the structure here is looking like what? We have divergence all across this thing on the daily scale. And it's very weak at this point. Meta, it's a great move. It's a great move. I get that. But you do have divergence all the way across this RSI. Can it go up higher? Yeah, it can. It can still go make like a flat one or something like that. But if this MACD is able to curl over, we could experience some prolonged weakness. Hopefully that stays in positive territory, right? Hopefully that curls right back up, because if it doesn't, you could break through this level, use it as resistance, and start heading down over time, and then see what happens around earnings. So we're paying attention to a lot when it comes to these type of stocks, but for the most part, you just have to notice on the monthly scale, a lot of them do not look like good investments for the next 12 to 24 months, which would tell you maybe they are bad investments over the next 12 to 24 months, right? If you're not a good investment, then you're probably going to be a bad one, okay? Now, AMC, this one a little bit cool. So this is just something cool I wanted to talk about. This is, if you saw this on any other stock that wasn't AMC or GME, you would say this is a good thing happening, right? We're finally seeing something different. This stock has always struggled to close below or above that 200. I don't believe we've done that since like 2022. So the fact that you're seeing this right now and just close on those moving averages, that is something different. You can curl up this MACD and maybe you see something crazy. That's what you would say. You would at least say this might be a good investment for the next 2 weeks if you get a curl up of that daily MACD. That can have some prolonged positivity in it for a while. So that's what is happening with AMC right now. You're seeing it curl up, it's doing something different, so maybe that is something to pay attention to. Notice I'm not saying, oh, the same thing is happening, so expect something different, right? Kind of like the like the people are saying in all these articles, like the media is saying, it's like, oh yeah, they're cutting rates, but this time is different. Layoffs are happening, but this time is different. The same thing is happening and they're telling you something different is going to happen. It's like the definition of insanity. This is the opposite of that. This is something different is happening, so something different can happen, right? So that's what we want to pay attention to. We have that level of 536 for this week. We are going to update that for you on Sunday, so make sure you're coming back and you're subscribed and ready to get that info, because this is important. This is the level that updates every single week, and we can see where the price action has to get above to see something crazy. But this is something different. I would pay close attention if this daily MACD is able to cross up on Monday. GameStop, a little bit different story, just showing, hey, it's closing below these moving averages. The only good part about this is the price action is still above that 200, and you are crossed up on the MACD, but it's just not seeing that strength yet. It's not in positive territory, so maybe this needs to consolidate further until earnings, and then we can see some buying that maybe leads into a gamma squeeze if they release some very good info. The key thing with both of these, Bollinger Bands are getting tight. You're seeing, especially in AMC, some big moves, some expansion moves, right? Some rip around moves, boom, boom, getting tighter, getting tighter, getting tighter. And then once we get into that contraction very, very tight, we can see expansion in one of those directions. And I think GME is just waving around a little bit more than that, and earnings is going to be very important going forward. So I'd pay attention to that. Now, we already talked about the dollar a little bit, just showing like, hey, it's in an area where it can explode higher. We've seen V-shapes from there, but we've also noticed that it could mean that we're getting some kind of short squeeze. We'll pay attention to that during our live videos. Make sure you come back for those. And then when we go into volatility, what was the overall statement here was, hey, we're going to, up here with these big green bars, we were like, we're probably going to experience a short squeeze. We experienced a short squeeze, and then we said, are we going to get more of a short squeeze? Well, that would be if this crosses down on the MACD. It crossed down on the MACD. We said, okay, now we're going to short squeeze and probably get a test of the 200. We get a test of the 200. We see a blip. Now we have to see, is that going to close back below the 200? And right now, the shorter time frames, we'll go over this on Sunday, they are leaning towards that. We'll see how Monday opens up with a little bit more price action. But for the most part, you would say if this closes below the 200, you can see a squeeze for a little bit of time. But the positioning of how low this 200 is, and the 50 has crossed that 200, you have to be aware if that is brief and then you see a spike in volatility, because 1212 is where you see spikes. Look for if that daily is ever crossing up for volatility, because that could mean some sell-off is coming in the overall market. And I think that's something important to say. So what is the main takeaway here? The main takeaway here is you need to be paying attention to that jobs data. Why? Because they said, we do not want to see this tick up again. We do not want to see unemployment tick up. We don't want to see weakness or cooling in the job market. And so therefore, if we see that weakness, if we see that cooling, then we should know that they are potentially going to react, especially if that number is bad enough. If it's a little off, I don't expect them to do anything, but we still could see that reaction in the market. And then you'll just get that surprise of 25 basis points. Then maybe that's our euphoric moment. But right now, September 6th looks like the important moment. Looking at the bigger time frames is always a good thing to refresh ourselves. We haven't done it in a little bit. So just to show you guys, those monthly signals are still holding. Weekly signals are forming. Daily signals look like we need to pay attention if things start to roll over, but we could still see that upside until we make a divergence at the all-time highs. All of those things together lead us to believe is right now a good time to say invest for 12 to 24 months. Most likely it is not, right? We're not seeing those investment signals. We're not seeing momentum confirm that, and that's mainly what we're talking about here. We're just trying to teach you guys how to look at momentum, and that's what we do in our courses. So thank you guys so much for subscribing today. If you want to take those courses over the weekend, they're 90% off until the end of August, so get them while they last. The indicators, the using indicators course, using divergence, using weekly ranges, that course is fantastic, genuinely fantastic. That is one that I've heard the most about. And then if you want those swing trading signals as well, you can get that down in the description as well, just to get those entries and exits for swing trading and a little bit in depth of how to treat the MACD during swing trading as well. So thank you guys so much for joining today. I really appreciate it. Make sure you go spend some time with family, or at least treat yourself to a nice meal this weekend, and be mentally prepared for the week that's to come. I think we're about to still experience some crazy market behavior over the next couple of weeks before we get that job data. So thank you guys for watching. Really appreciate it. Have a great weekend. Peace.